welcome to the third and the last session of today. Rosie Wardle will be your host for the next 15 minutes. So let me quickly introduce Rosie. I've been a big fan of Rosie's work at FAIR for a few years now. I think when it comes to ESG issues, in the conventional animal agriculture industry and looking at it from the investor lens, I think Rosie is definitely one of the experts. And when I started putting together this session, Rosie was the first person I wanted to invite as a guest, and soon after it becomes very clear that Rosie will be a way better host for this than I could ever be. So I'm going to pass the mic to your host, Rosie.
Thank you. Thank you, Elaine, for that intro. Appreciate it. And you've done a fantastic job hosting the previous two sessions. So you're a hard act to follow on the host front, but I will do my best for sure.
No, you'll be great. Thank you.
Thanks, Elaine. Cool. So we've got about 140 people in the session now. Thank you all for joining this. So for the next 50 minutes or so, we're going to be focusing on sustainability and impact benefits of alternative proteins from an investor perspective. Elaine briefly introduced me there, but just to mention kind of my role at the moment, I'm an investor at CPT Capital. We're a London-based family office with a specialism investing in alternative proteins. We've been making investments in the sector since 2013. Our first were Beyond Meat and Impossible Foods, and we now have a portfolio of over 30 companies kind of across technology verticals in this space. And Elaine referred to this, but prior to joining CPT, I set up an initiative called FAIR, which is a global investor network. It's over $23 trillion now, focused on understanding investment risks and opportunities in protein production. So from both a kind of venture and a mainstream asset management perspective, I've really seen firsthand how interest in this area has grown. And so just to kind of spend a few minutes framing this session before I introduce my participants, Ben, Leonie, and Lee. So sustainability and impact investment for alternative proteins. As many of you watching may have noticed, it's a topic which has garnered increasing interest recently. There's been some negative coverage in the press on whether companies like Beyond Meat, for instance, are really sustainable or healthy. Some consumers and indeed investors too are kind of starting to question the sustainability and health benefits of these products. So I guess our starting point for this session is this. We all know, everyone listening knows the huge impact that livestock production has on the environment, on human health, food security, animal welfare, and the kind of critical need to transition the food system away from one that's reliant on animals is very well established at this point. And Bruce did a great job of laying that out in his keynote. We also all know, I hope, that alternative proteins do provide a solution to some of these food systems challenges, and they do offer pretty overwhelming benefits, really, over their animal counterparts if you look at many of the key sustainability indicators. And again, kind of needless to say, these positive impacts are something that has been really driving these opportunities for venture capital and for the broader private sector in kind of getting involved in the alternative protein space, as well as obviously promising strong returns for investors. So the fact that the industry is getting some kind of negative pushback on this, I think is pretty critical, and companies and the industry as a whole really needs to respond. Firstly, really to strengthen investor and consumer confidence in the space, but also to really ensure that companies are building truly sustainable business models and production systems. And putting it in other words, I mean, if the sector gets this right, I think it kind of hits a few things across the board. We can accelerate adoption of the products, we can drive more investment in the space, and we can create value for the businesses and investors in the longer term. So in this session, I kind of want to dig a little bit deeper into this and look below the surface. Obviously, we don't just want to talk about how amazing alternative proteins are from a sustainability perspective. We want to take a slightly more critical investment lens and really explore what sustainability and impact means for this sector and what companies and investors can do about that. So I'm really pleased to have these three amazing experts here to contribute to this discussion, all of whom are kind of bringing quite different perspectives. Firstly, we have Ben McCarran, who is founder and managing director of Asia Research and Engagement. Ben is an expert in the intersection of investment and sustainability, and he founded ARE in 2013 to bring the voice of institutional investors to sustainability challenges in Asia specifically. And Ben and his team have actually undertaken a great deal of work specifically on sustainable proteins, so we can talk more about that today. Secondly, we have Leonie Kelly, who is partner on policy and practice at the Sustainable Finance Initiative. SFI is a community platform aimed at promoting the growth of sustainable finance in Hong Kong, and their mission is to mobilize private investor capital for positive impact. And SFI have also recently been delving into the alternative protein space a little bit, so I'll look forward to hearing more about that. And last but by no means least, we have Lee Recht, who is head of sustainability at Aleph Farms. And Aleph Farms, as you may well know, is an Israel-based cultivated meat company. Although Aleph are obviously still in the R&D phase, as are all the companies in this technology, they are already developing their approach to sustainability and kind of building that into their strategies from the outset. So they really are a leader from the company side in this space. So we have some really awesome expertise across mainstream investment, impact investment, and startups here, and I'm excited about the discussion. Anyone watching, as Elaine mentioned, feel free to ask questions. If you want to direct them to Viola from GFI in the chat, that would be great, and we'll address some of those towards the end. So to kind of kick us off, Ben, I would love to start with you. As I referenced in that introduction, one of the major drivers of change in the food sector and of innovation and investment in alternative proteins specifically is obviously growing awareness within the investment community of risks linked to traditional protein production, in other words, intensive livestock farming. So given the work you've done on this specifically, can you kind of open up by giving us a sense of how ESG issues in protein production are rising up the agenda for large institutional investors that you've worked with? And it would be great if you could add a bit of an Asia context to that as well.
Sure, and thanks very much for the question. It's great to be here today. Or this evening, I should say. So I think the first thing, just to disaggregate for the audience, is what we mean by the word investor. And I think I'd want to differentiate three things that we can mean by the word investor, because it'll help to be more precise in the conversation that follows. So point one is institutional investors in private equity, institutional investors in public equity, listed companies that are listed on a stock market. And usually they'll be invested in companies that are in traditional protein producers, animal husbandry, livestock, seafood perhaps, and then also the buyers of those, so large supermarket chains, restaurants, hotels, to some extent airline companies. They are large caterers, though not quite at the moment. So that's what's happening in the listed company universe. And the second category is, I'll say, impact investors, and they're a type of private equity investor that cares about creating change or cares about not damaging with their investment. And then a third type of investor, which is sort of just generic private equity. Often they want to give growth capital to businesses, but they care more about returns, and they don't really care so much necessarily about the impact. So then we can talk about those three different buckets and hopefully be a bit more precise. So bucket one, ARE, we structure collaborative engagements. And that means we bring large investors, mainly in public equity, in listed companies together, and speak to companies about the steps that those companies are taking to manage environmental, social, and governance, or ESG issues. And there's a range of reasons for that. Two reasons are either because things like climate change are a risk to all of our portfolios, and so are things like antibiotic use. I noticed one of the questions was specifically about antimicrobial use. So that's sort of the top-down things that they think about. And the bottom-up things that they think about are things that could affect a company and its returns directly. And that could be food safety. That would be a really big one. That could be reputational risks associated with deforestation in the supply chain, or with the wrong standards of animal welfare, or something like that. For a supermarket, it could be on the opportunity side as well. It could be, hey, if you look at your competitors, all of your competitors have got loads of fridges stacked with alternative proteins. Do you think maybe it's time you gave some shelf space to those alternative proteins? So that's the kind of conversation. And the good news is, and I think I can probably, the best proxy is to refer back to FAIR and the number of investors that have signed up to FAIR, which is now quite a lot. I think, what, $23 trillion of assets under management,
yep.
Something like that. Yeah. So in Asia, we've been working with investors. Back in 2017, we had just a couple that were supporting us. And now we're working with 6 large institutions with assets under management of 2 to 3 trillion in our conversations across the region. So I can definitely say that there has been a growth of interest in these risks by that kind of investor. The private equity piece and the impact space, I think we can say it's hot. The alternative protein space. I think we can say that private equity is probably a bit more interested in the things that are going to really matter financially. Food safety. You can't have those kind of food safety issue, and obviously if it's alternative proteins and there's fantastic growth potential there, then that's really attractive. And then other issues that might matter would probably be more reputational risks. We've already started talking, you mentioned, Rosie, the sort of like health benefits, but are they really health benefits, or the way that PR battle comes out. So one thing that's also important is whether alternative protein companies, or any food company really, is investing properly in PR in case an issue does arise. And that's really a risk prevention measure. It's not an impact. It's not something that they're doing out of the goodness of their hearts. Mm-hmm. For that, you need to look at the last category that I mentioned, the impact investor. Mm-hmm. But perhaps I think Leonie is probably going to be much better talking about that back category than I will be.
Yeah, no, thanks, Ben. That's a very helpful kind of overview of the investor spectrum, I guess, and how different types of investors are starting to look at this. And it's good to hear that you are seeing from your the investors that you work with in Asia a similar kind of trend and interest in engaging with the big listed companies on these issues. But I guess, can you expand a bit on how you think those mainstream investors are looking at this emerging alternative protein space, and specifically, I guess, the more cutting edge technologies? Because obviously these aren't yet investable opportunities for many of those large asset managers, for instance. And I know you guys collaborated with Credit Suisse recently on a report on this topic. So how are they seeing this? Is it kind of more from a thematic perspective that they think, okay, this kind of fits in the box of it's providing a solution to a kind of thematic ESG challenge, or are they starting to look at a bit more depth at, specific sustainability impacts or indicators at this point?
So it's quite funny because there is a bit of a disconnect between the driver of the interest and what you actually need to do to have a successful company and a successful investment in a successful company. I think you're right. A lot of the driver for the interest is top down, and here it is private. Most of it's private equity in the alternative space. But having worked out, as we did for that Credit Suisse report, that there are millions of square kilometers of potential deforestation or land use that's saved if we switch to alternative proteins. Having worked that out, what you then need to do is go and build a company like David did, and we'll hear about Aleph Farms in a moment as well. Build a company, and the things that you need to do to build a company are quite nitty gritty. They're often a long way away from those drivers that are there. So I would say that. And specifically in the case of the listed company conversation, the conversation might go with a large protein producer, well, you might get disrupted. So are you doing anything on alternative proteins, or are you sort of just waiting? And actually, we found some of the meat companies have already taken quite a proactive, well, it's reactive, really, but they are doing something. And it's a bit like being a car manufacturer. 15, 20 years ago, you could be a car manufacturer and you didn't need to know about electric vehicles. Now, if you're a car manufacturer and you don't know anything about electric vehicles, it's almost like, well, what are you doing? You need to have that in your strategy. And I'd say we're getting to that point with sort of animal protein companies now. They need to have some kind of story. Mm-hmm. They don't need to have all of the story worked out right now, but they need to be thinking.
I like that analogy. That's a good one. So Leonie, I'd like to bring you in here to kind of just add a bit more colour to that impact investor context that Ben mentioned. I mean, are you seeing from your network at SFI growing interest in this sector? If you are, what do you see as the drivers? And I guess are the types of impact investors that you're working with, are they seeing this emerging sector as kind of naturally fitting within an impact thesis?
Sure. I suppose just to put it in a bit of context, and I agree, Ben, with the kind of three categories that you've listed there around activity in the space and alternative proteins. We can have it in the public equities listed space and institutional, traditional private equity, and then the impact investors. I suppose for us at Sustainable Finance Initiative, how our investors are looking at this is they're very much thinking across asset class in terms of how they want to invest for impact. And I suppose that's in overall keeping with our fundamental thesis for Sustainable Finance Initiative. At the end of the day, our vision is to try and make sustainability synonymous with finance. And to do that, we need to go beyond one asset class and do it across all, and think about the E, the S, and the G across all of those as well. And I think when we zoom specifically into alternative proteins, in terms of the interest, or your question, Rosie, and whether that's aligned to a specific impact thesis, I think for our investor community, so we did a survey back in the end of 2019, and what we learned was that nearly 60% of our investor community, they mark food and agriculture as one of their top 3 preferred investments to make. Now, when they look at food and agriculture, I think that's across the spectrum of food and ag verticals that we see today in the market. So that includes alternative protein. It includes sustainable production, consumption, agricultural technology, conservation, climate change, issues related to land care, soil health, and also around social equity and sustainable livelihoods, such as fair trade, workers' rights, etc. So our investors think across those different verticals within the food and agricultural category very much. And I think the interest is evolving as we've seen the number of deals coming through our desk on a weekly, daily basis increasing rapidly. And probably, mostly in the VC space, just because of the symptom of where the market is today at a very innovative stage. So kind of with that wave of fundraising opportunities that we're seeing increasingly come through every month, I think there's an urgency on our side as the sustainable investors, if we call ourselves that, rather than just the impact investors. If as sustainable investors who care about environmental, social, and governance factors, we are concerned about trying to understand, what's the impact pieces of these different funds and underlying enterprises that are coming through to us, and how do we measure impact and performance, from a non-financial perspective, and what are the important indicators for us to be actually valuing. So those are some of the things that kind of concern us today.
That's helpful. Thanks, Leonie. And I guess kind of building on that, then the frameworks that you would use as SFI and in kind of your investor networks to assess impact opportunities, in applying that to alternative protein opportunities, whether it be funds or direct investments, kind of what are you hearing from, well, have you tried that, and what are you hearing from kind of investors that you work with, or you yourself internally, in terms of how those frameworks can be applied, and if you're getting the kind of data that you need from the companies, for example, in order to actually make those assessments?
Yeah, I suppose first off, just to take a step back from alternative protein, I think we, again, as sustainable investors, we see impact measurement and assessment as is really fundamental, right, to understanding any investment. And so we're kind of thematically agnostic in that sense, that impact assessment is conducted across all of the investment coming through to us. I think we also recognize that what you measure is an indicator of what you value, as well, and so does our investor community. And I think also if you look to statistics like the Global Impact Investing Network released earlier this year, we're seeing a rise in investors looking for more sophisticated impact measurement and management. And with that, I suppose we're also seeing a wave of different standards, principles, protocols, values, everything coming into the market and causing great confusion at the same time. And so for us, how do we look at it and how we applied it? I think for us, we've actually just released an article which we called the Portfolio Approach Towards Impact Measurement and Management. And this takes you through kind of the assessment methodology that we've built to assess all companies. And we have applied that to alternative protein and to at least some of the different VC deals, private equity funds that have come through to us. And how we're thinking about that is it's very much been designed in collaboration with our investor community, and also through conversations that we've had with the likes of the United Nations Development Programme, SASB, GRI, and it's very much been influenced by that. But at a very high level, what we have done across asset class is taken 4 key impact categories to assess impact. And those include, what are your commitments towards impact and sustainability? Are you aligned, for example, to the FAIR initiative? Are you aligned to the principles for responsible investment? And what are the policies that you have in place to ensure that commitment actually turns into practice in your organization or your enterprise or your fund? So can you showcase your sustainability policy or ESG policy in-house? And what are the metrics behind that? That's the third category. And what are the types of metrics that you classify as material, and financial material metrics that will have an impact on the underlying enterprise and portfolio? And fourthly, we look at the strategy. Is the strategy around exclusions? Is the strategy around thematic? Or is it more positive? Are you trying to, deliver kind of benefit to stakeholders and contribute to solutions in climate change? So those are the 4 key impact categories that we're looking at today. And of course, all of those we've built in what you may have heard of, the Impact Management Project, which is now an international initiative with about 2,000 different institutions that have come together to really build consensus around what do we mean about impact. What does that mean to an investor, and how do we quantify that? From a non-financial perspective. And I think we've, as a market, very much grown, I think, in the past 2 years. We've seen the Impact Management Project now being applied to significant private equity funds, institutions, and even banks starting to use this. And how that works is Impact Management have classified 5 key dimensions of how you should assess impact. What are you investing in? What's the outcome that you're trying to achieve? How much have you achieved? Who are you trying to impact in society? What's the contribution and risk of you not achieving these impacts? And those are some of the key facts that we're looking at. And I think alongside that, we've tried to work with another classification system called the IRC, the Impact Risk Classification, which kind of takes a more holistic approach to assessing kind of what's that enterprise's theory of change. And that's also important for us to understand, because although alternative proteins today may be at a very early stage, if we can understand from the enterprise or the fund manager the kind of the longer term effect that you're trying to create in society, we may be with you for longer on that journey as investors. If we don't see that story board mapped out, we may lose confidence that that doesn't exist. So that's very important for us to see as well.
Yeah. Yeah, thanks, Leonie. And I mean, it's a great point that as the kind of concept of sustainability reporting and impact assessment for investors just kind of become much more mainstream, there has been this kind of proliferation of different frameworks, different metrics. And so initiatives like the Impact Management Project, I think, are key to trying to align some of those. And I guess for me, in looking at this sector, the next stage is then figuring out what from those frameworks that kind of have a critical mass behind them in terms of investor buy-in, which parts of that really work for the alternative protein sector in kind of driving sustainable practices, I guess. And okay, Lee, I mean, I'm keen to bring you in now as obviously a company in this space that has a leading approach to sustainability. So it'd be great to kind of hear your perspective at this point. And obviously, as I mentioned, you are the head of sustainability at Aleph. And first of all, I mean, it would be fascinating to hear from you kind of what the drivers were for creating this role internally, because it is quite unusual, especially for a cultivated meat company. Were you seeing demand for your investors, for example, to build out this type of, sustainability approach, or was it more internally generated? It'd be very fascinating to hear a bit about that.
Sure. So first of all, thank you for having me. Definitely. One of the reasons, our driver, of course, I mean, having investors support the sustainability aspects is very important, but actually this was very internal. We were looking towards how we can vision the food systems of the future, and we understood that there needs to be a major change. So cultivated meat is one of the categories in alternative proteins. And definitely when you are comparing alternative proteins to the conventional meat industry, you're going to have a sustainable aspect to it. But in the end, we're going to be our own independent food system, where we're going to be generating our own carbon footprint and our own manufacturing system. And the more we kind of investigated and tried to understand how we vision that futuristic food systems, we understood the importance of being sustainable and resilient. And we're in honestly, we're in the best of times just to prove how important building resilient food systems are critical for the survival of us. And we kind of understood that, to be honest, everything happening now with the pandemic has only really emphasized and strengthened our vision and the way we want to take it. So it's, but I do really want to say that this is the way we look at sustainability, is that it's not only a good to have thing. It's not something that you can only position as something that's wonderful and that you need to donate back to the environment. Sustainability, when you really dig into it, it has to be a driver for the growth of the business. It has to be profitable. It has to be economically, it fits well. It also has to have those strong impacts also on not only on the environment, on health and nutrition, on aspects of social sustainability and how we strengthen the communities. So these are all things that are really important. I mean, we built our sustainability strategy as a driver for the growth of the business. I mean, it was always kind of, that's how we're big believers of the way you need to look at sustainability.
That's fantastic to hear. And so I guess building on that a little bit, we've spoken a lot with Ben and Leonie about, well, how investors are viewing this sector and kind of the different frameworks that are out there from an impact perspective that investors can use to assess companies, for example. But these are obviously all quite general frameworks that are being applied, across asset classes, across sectors. So thinking specifically about alternative proteins and I guess your specific technology of cultivated meat, I mean, firstly, what do you think are the kind of major misconceptions about the most important sustainability issues for a company in this space? And kind of taking that further, for you as a company, which sustainability issues or areas are you prioritizing then?
So regarding misconceptions, it's sustainability is complex because we speak about it sometimes when I'm in conversations with different people. there's really like people kind of, first of all, they vision sustainability when they were children 20, 30 years ago in an aspect where today sustainability can't be the same. The population has grown. We have utilized more and more of our resources. And the way we look at sustainability today is not the way we imagined sustainability 30 years ago. I mean, or 20 years ago. Or even 10 years ago. So that's one major thing that needs to be understood. Sustainability is constantly in a development to adapt itself to how we are today and with the resources that we have today. Another really major issue that I think I see a lot with this sustainability is that a lot of people connect it mostly to environment, and a lot of times they'll even put it in more of a kind of, I don't know how to say it. Like I said before, more of like we're doing good to the environment. But no, this is not how we look at sustainability at all. This has to be a much more holistic approach. It has to be much more balanced. And there are always going to be trade-offs. I mean, it's not going to be, if you only approach one area and go directly towards it and don't look at other aspects and the different consequences that are going to happen, then you're not being sustainable. So there's an understanding that in sustainability, there's also going to be elements of compromising towards getting something that's more holistic. Today, I have to say with the meat industry, there are aspects and ways to generate the meat industry that will be more sustainable. That is not only through alternative protein. So it's really important that we find that balance of making sure that every single category within the meat landscape is working towards building a more sustainable and a resilient product and production line and supply chain, of course.
Mm-hmm. Yeah. And I guess with that kind of inevitable compromise or balance in mind, I'd love to ask Ben and Leonie if you had any comments to add to what Leah said in terms of, what you think are the kind of most important sustainability issues for companies to address in the alternative protein space. I mean, Ben, you mentioned before, I think, food safety obviously is a key issue for the kind of food sector more broadly, reputational risk maybe, but does either one of you want to kind of build on that a bit?
Sure. I think from our perspective, or at least what we kind of, I see one of the questions as well there was, what exactly do we assess when we measure? Which is a very good question, because we're asking ourselves, what are the key material informations that we should be assessing right now in alternative protein? And I think we're at a point in time where we're trying to crystallize what those are. I think, as Lee said, sustainability, it's clear that we need to take a holistic approach to this. We no longer get a choice as investors to think of this as as an afterthought, right? This drives performance now. It drives performance and financial performance going forward. And I think that's what we've certainly seen with COVID-19 and the resilience factor shining through. If anything positive is to come out of this, it certainly has helped the sustainable finance industry see that, get more proof points around the fact that, hey, hang on, actually ESG can do just as well, as other investments. So I think that's important to note. And I think we can look to what the market has already created. And I think especially for investors in the space, we don't want to reinvent the wheel. I think we've gotten to a certain point in time now where we have several different standards, and now we have the Sustainability Accounting Standards Board with the Global Reporting Initiative, with the PRI, we have, the list goes on of how many different systems and metric databases or metrics that we have to assess impact. But I think, if you only look at SASB as an investor as we are, we want to be understanding the financial material indicators, and that's critical. And that is where SASB has focused. And those material indicators where, they are assessing impact either in food and ag or processing or even in the meat industry, some of those indicators are also applicable on alternative protein. And we're already seeing companies reporting on the environmental impact, conducting life cycle assessments. That's fantastic, but we need more than that. right? We as investors need to look beyond the positive impacts that we're having, and we need to try to measure the negative impacts as well and take a more holistic approach. Because quite honestly, it's the negative impacts that are going to affect the bottom line and going forward, and it's going to affect the reputation, as Ben said, going forward. So if you're not capturing those negative impacts purely because they're difficult, I don't think that's, we have to put in the systems today to start capturing them. And I think those types of information that will be important will be around social capital, right? Food safety, health and nutrition, and Ben mentioned product labeling, responsible marketing. I think are all fundamental to alternative proteins as well, and continuing to capture the environmental impacts as well, and not forgetting the governance factors around supply chain issues as well, and human capital around health and safety. I think all of these are applicable, and we already have systems of indicators from SASB and from other systems that we can start to apply and capture today. And the more we start to do that as investors and enterprises, we help ourselves, right, to track performance, because at the end of the day, if you're tracking sustainability and really integrating it into the business, it is going to help you in terms of managing your own business and success in the future. And so those are some of the key indicators that we are looking at today, but we need to take, I also agree, a balanced approach, and that's something that Lee mentioned. And I think we're trying to find what's that balance. And when you're such an early stage innovation, how do you balance innovation with kind of management? And maybe we can look to other industries to learn from that too.
Yeah. Ben, did you want to add anything there?
Yeah, I just guess I'll make 2 points. One is there's a reputation management question. And the reputation management question, food safety is the really obvious example. And large food companies just get this all wrong. They kind of get it wrong all the time. They also get it right all the time. But, Maggi noodles, Nestle's, that challenge that they had in India a couple of years ago was just, an example. But what would proactive reputation management mean in the alternative protein sector? I think it's exactly what Aleph is doing. It's have your sustainability function coming in right at the beginning and make sure that it's designed in from the ground up, and that if people are going out there and producing calculate, because of course at the moment cultured meat has got a very high overhead from it's just very expensive, and so of course it's going to have high footprints right now, but for most of it, it's not a commercial product right now. So why would we be expecting it today? So it's very easy to write an assault on cultured meat saying, no, the environmental impact's really high. So then making sure that one's got the proof points and the evidence points to address that. Or the kind of the quinoa and the Andean farmers that can't have quinoa anymore. Just making sure that one's got the proof points. Or the other one, soy, and what if everybody goes and eats soy? Doesn't that cause deforestation in the Amazon rainforest? And it's a real facepalm moment for anybody who's been in the space for longer than 2 minutes, because that most of the soy is grown for meat. So sort of being proactive about making sure that we're on the front foot about all those issues. And then also, and here's an example from the solar power sector that was quite interesting, and that investors did get involved in. I remember this one from about 10 years ago. There's a large Chinese solar power company. And of course, you think solar, renewable, sustainable, fantastic. They were growing too fast, and they didn't know what to do with all the chemicals. There's a lot of poisonous chemicals in solar production. It was being dumped outside and causing problems and polluting for the local communities. So, the alternative protein sector really can't afford to have that kind of issue come up. And I've just given an example of non-real issues, but we don't want to have a real issue that could come up. So we do need to address that from a reputation perspective and just make sure that we're consistently ticking those boxes.
Yeah.
The other piece I think that's critical for impact in the longer term is we've got to get those price points down and be contribute. So at the moment, the nutritional question on plant-based is like, is it or isn't it as healthy as, meat? And then you get sort of two dimensions to the argument. One is it's healthier than a burger, but then the other is, but it's less healthy than, going and eating pure plants and leafy green vegetables, right? So if though we want to have a larger scale conversation, then we want to be talking about the impact of plant-based or cellular agriculture based on broader nutrition and food security in countries. And in order to get to there, we need the price points to be radically lower than they are today. And at a point where, if you go to Indonesia or Philippines, which have got large growing populations and large numbers of people on $1,000 per capita per day and moving through those price points with a lot of aspiration for meat, and in many cases able to, animal proteins are going to prevent malnourishment and undernourishment. For alternatives to be able to get into that space and make a really meaningful contribution on the social side, it's nutrition and it's accelerated price point decline, in my view.
Yeah.
I think those are the two.
No, I think that's a great point, and that's exactly why I think these types of conversations and this topic in general is so critical, because it's only when you get those mainstream consumers globally who are starting to actually adopt these products and we see a meaningful shift from animal proteins towards alternatives that we'll get to be able to actually see real impact, right? So I think that how you actually build the product and the businesses to enable that is obviously a critical question. We'll go to some questions now. So please, everyone, send directly to Viola at GFI if you've got questions. There's a few coming in now. One from the audience right now is, to what extent are we seeing a food tech bubble? Do we think valuations have run amok? Is everyone drinking the Kool-Aid? I have perspectives on that. Leonie, do you want to talk about maybe how your investors in SFI are seeing this? Like, are they worried about the valuations, and are they thinking that there is a bit of hype in this space?
I think we've two different camps. I think, yes, some in that camp and some who probably think it's too early to take a decision on that. Or it's still very early stages in terms of the return expectations and everything that's still yet to be determined. So that's kind of where we lie at the minute.
Ben or Lee, any thoughts on that one?
I was a fund manager quite a long time ago, over 20 years ago, and I was managing money and technology in the tech boom just before the millennium. And valuations is an interesting question. That certainly was a bubble. On the other hand, there were many companies that came through that bubble and absolutely justified what appeared at that point in time to be sky-high valuations. So, in fact, both camps can be right. You can, we can see extremely high valuations, and people could even lose a lot of money in the space. In fact, people will. Some of the businesses won't work, unfortunately. On the other hand, the alternative protein sector is going to grow hugely, and some people will be winners. So I think we'll see a bit of both.
Yeah.
God, it looked like you were about to say something.
Yeah, no, I would agree with that. And I think I'd echo what Alex in the first session said, that I think about that in the way that we really need to see proper innovation and real technology in the space versus, I think now we have a lot of brands essentially that are coming in with slightly improved technologies, kind of building a little bit on products that are already in the market, and the valuations don't reflect that. But on the other hand, we have real examples of true innovation that I think could be completely game-changing for the whole food sector in terms of how we produce protein. And for those cases, I think, the valuations are justified because we know that business as usual isn't an option anymore, and we need change and we need innovation in the sector. So I agree. I think we have both probably in space right now. Another question is, obviously within alternative proteins as a category, there are lots of different technologies or approaches at play here. So, and maybe Lee, you could comment on this. How do you think the challenges are different for a cultivated meat company like Aleph to address sustainability issues versus a plant-based or a fermentation company, for instance? Because it seems like, you know, the different technology approaches kind of receive slightly different criticism or questions. And for cultivated meat, for example, we often hear about the you know, the energy requirement that might be required for scale up in future and that kind of thing. So do you have a view on that?
Yeah, sure. So first of all, I always like kind of saying that plant-based products are alternative to the meat protein, but cultivated we're actually the meat, but the alternative is in the production itself. So it kind of has it's a bit of a different way to look at it and a different approach. And it kind of brings with that all different kinds of aspects. So one of the things that, for example, we take very clear, we put a very strong emphasis is in that we are part of the meat industry, and we do want to, and in our social sustainability aspects, we are looking at the livestock farmers and understanding that in the end, we are all here together to be part of the landscape of that meat industry and see how we can actually work together and alongside. And that's something that on our sustainability point of view, we're putting a very strong emphasis on. I think that's something that we really do appreciate, because we see when new technologies come in, innovative technologies come in, the conventional industries sometimes look at it and kind of think, what does this mean about me? How am I impacted? Is this going to take part of my market? Is this going to take part of my share? Then we're actually really looking at it in a different approach, that we can work together on this. And we have, for example, we have Cargill as one of our strategic partners and investors, but beyond that, also the livestock farmers, where we understand the importance of working alongside together. So that's something that I think is something that we really put a focus on. Regarding the energy, I think Ben said this as well. This is all in an R&D process. We're still kind of, there's a lot of predictions here. I think now that Aleph Farms is now kind of moving from R&D towards, we're building our first pilot now, and we're establishing our commercial pilots for 2022. And when you look at it, there are a lot of ways and a lot of different kinds of practices and technologies that are going to be able to reduce this energy, and the way the different business models, and looking at that aspect. So yes, when you look at it in a very clean way, and you're kind of comparing technologies maybe to, the way the methodology has been working up to now, I think in that matter, it's okay that people are looking at it as in the energy source, but there's still a lot of improvement that can happen to reduce that energy as well. I mean, at least in Aleph Farms, we're putting a lot of efforts on how we make sure. We've pledged, I think a couple of months ago, that we're going to be, our facilities are going to be carbon neutral by 2025, and our supply chain is going to be carbon neutral by 2030. And we're building our roadmap to how to achieve those goals, and we see that there are absolutely opportunities and options to do so. And of course, by reducing, by improving energy efficiency, using renewables, using a circular approach, there's many methodologies for this.
That's awesome. That's a very inspiring vision. And just on the biofarm and the kind of the start of the scale up that Aleph is working on right now, there was just one last question in the chat, not on sustainability specifically, but when are we going to see commercial cultivated meat products? So can you give us a timeline from Aleph's perspective on that?
Yeah, sure. So we actually came out with our first product, our first prototype, at the end of 2018. And now what we're doing is we're really working on the pilot itself. So we're really currently, we're building a pilot in Israel towards our process and scale up. We already have plans for a commercial pilot, so a limited launch for the end of 2022 or the beginning of 2023. And we're excited. We're working hard and moving forward.
Awesome. Well, that's a very positive note to end on, I think. So unfortunately, we're out of time. Thank you so much, Ben, Leonie, and Lee, for joining this session. I think it was a great discussion to kind of kick off, hopefully, a broader conversation on this topic. And I really think, I think going back to Ben's point right at the start, that one of the key elements of this going forward will be how we really get the right balance between, getting investors access to the kind of information and data that they need to make informed decisions, and encouraging companies to take a robust approach on sustainability. But on the other hand, not overburdening companies, I guess, especially at this very nascent stage of the industry where, quite frankly, we need much more capital coming into the space. And so not overburdening companies with such detailed requirements. So that's going to be the balance we have to strike. But I think there's a lot of kind of willing to collaborate on what that looks like and developing approaches to do that, which is exciting. So I'll look forward to continuing the conversation offline with all of you. And I know GFI is interested in kind of pushing forward this topic further. So thank you all again.